Hello and welcome to Trading the Trend, a new show that we're going to be having every Wednesday that focuses on the importance of trading within a prevailing trend, trying to get into it and out of it, and also trying to ride it at times. I thought, given the fact that this is the first show that we're going to be doing in this series, it probably makes sense to go with one of the biggest underlying trends that we are seeing throughout financial markets at the moment. It has been dominating, irrespective of whether you're looking at FX or whether you're looking at the equity markets or the commodity space. Certainly the US dollar has been at the forefront of all of that. And the dollar index is the market I'm going to be looking at. You can see the recent breakthrough on this daily chart through that 109.02. Now that was the peak that we saw here in the midpoint of July, and certainly from a wider perspective, the weekly time frame, you can see that the trend is a very good one on this instance. Certainly it's always my experience that it makes sense to look at things from a wider perspective first. That can be the weekly time frame, that can be the monthly time frame. Either way, you can see that we're looking at a market that by and large goes upwards since the lows that we had here in sort of midpoint of 2021. So if you've got a market that more often than not moves upwards, and you can see over the course of that period, there's only a small splattering of red candles. Aside from that, we have plenty of green candles. That gives you the basis for feeling quite confident that you are going to see further upside as you move forward, and feel like you would certainly prefer to be taking bullish positions. This daily time frame shows you this latest retracement. We did have this downward phase at the back end of July, but that sort of ABC style retracement into the 76.4 Fibonacci level ultimately resolved in a rally back into and through the 109.02 resistance level. We're continuing on that vein, and therefore it's a case of trying to craft a trade around this. Two different ways we could be looking at this. Number one, you can be looking at it on this shorter time frame, the intraday basis. This is the 4-hour chart, and you can see this creation of higher highs and higher lows means that you could be placing a trade here, placing your stops below that recent swing low of around about 109.15. But I'm going to look at things from a wider perspective and take a little bit more of a slower view on this one, placing my stops below this most recent major swing low, which is very evident here that we can see here on the daily time frame. So we're looking at this swing low of 107.27 and saying, well, you know, we've pushed onwards from upwards from here. I'd expect us to do so once again. At some point in the near term, we are going to break that intraday trend and probably retrace the rally from 107.27. But I don't think that that level is going to break. Therefore, I'll put my stop loss just below that. Let's say we'll put our stop loss at 107. So this is a little bit more of a safer, wider trade. Takes a little bit longer to come into fruition, but you're looking to get into a trade that has been going for a long period of time, and hopefully we see that continue apace as we're looking for upside for the US dollar.
For more videos from us here at IGTV, join us on Twitter at @ig.com, Instagram, and subscribe to our YouTube channel.